We've talked before here on South Florida Homes and Lifestyles about getting a mortgage and all the processing and all the paperwork you have to do to get a mortgage for your primary residence. Well, what if you want a mortgage for an investment property? Well, you should talk to someone who knows. Someone like Jeannine Henrion, who's here from Group 1 Mortgage. How does it differ getting a mortgage on your personal home versus a mortgage on an investment property?
Well, Kurt, the income and asset documentation is very similar. But when you're buying a primary residence with a conventional loan, you can put down as little as 5%. On a second home, you can put down as little as 10%. And those differences are because of the appetite of the mortgage insurance providers. Mortgage insurance is required whenever you have less than 20% down. On investment property, there is no mortgage insurance. So you need a minimum of 20% down, and the rate gets better if you're able to put down 25%.
Because the lender wants to be assured that it is going to be paid back.
Yes, so they want the borrower to have, a little more skin in the game, so to speak. Another thing that's different, when you're buying a primary residence, the lenders aren't necessarily as concerned with the reserves, the extra money that you have in the bank. But if you're buying investment property, then they want to see that you have reserves of 6 months principal, interest, taxes, and insurance in the bank, so that, let's just say if you lose a tenant or things like that, there's not the concern that you're going to default because you're missing that piece of cash flow.
No hand-to-mouth problems there.
Correct.
And of course, with a primary residence, you have to have some place to live. So the bank is going to be, or the lender is going to be assured that you're going to want to live someplace and probably are going to be much more likely to pay your mortgage than an investment.
Absolutely.
What about if you're buying an investment and need a loan for an investment property for your business?
If you're, SBA really likes businesses that have real estate with them. So an SBA loan might be a good avenue for a business owner to take. They're going to look at the borrower as a whole, the reserves, the revenue generated by that business. It's a little more complicated than just a residential loan, but Group 1 has resources to take that business owner to an SBA loan if that's the right match for them as well.
Actually, an SBA loan is probably really complicated, so you need somebody who can walk you through it.
We can take you through the steps. We have great resources.
Okay, Jeannine Henrion, good advice from Group 1 Mortgage.
Thank you, Kurt.